Okay, Sylvia, why do I need to be bullish in the long term? Give me some good news to start off this Tuesday.
Good morning, Courtney. Yeah, I mean, if you look back at the last few weeks, it certainly doesn't feel very good, does it? I think that, we're at an interesting point now. It feels like we're sort of at the June lows again. We're not quite there, but NASDAQ is in bear market territory. S&P is pretty close. We got to pull back off of that short-term rally. And I think, a lot of that was off of the Fed. And if we think about why, we've heard the reasons, right? It's been job and it's been inflation data. So I think that inflation has peaked and it's coming down. If you look at the price of gasoline, that's a big factor. Housing is coming down, durables are coming down, and consumer sentiment on inflation is starting to come down a little bit. So those are important points. I also think that, the market sort of overreacted to what we heard in Jackson Hole. Yes, the Fed is going to be persistent and, very firm in terms of fighting inflation, but they're pretty close to where they need to be. So if we get another 75 basis points and then we get another 25 or so after that, I think we're there. And I think once the market hears that the Fed is going to stop hiking, that's going to sort of turn things around. Also, just seasonally, September is the worst month, but October, it's 60% of the time you get a rally there. So that could be, the anti-predictor there.
Okay, so that's a glass pretty half full. Do you think that a soft landing then is indeed possible?
I think that a soft landing is possible. I think that if there's a recession, it's going to be a short-term recession. I don't think it'll be prolonged, and I don't think it'll be, deep and protracted like a 2008 situation, for example. We're not in the middle of a financial crisis. The consumer remains strong. The consumer continues to spend, even if it's less. It's gone from goods to services. Corporations are strong. You have solid balance sheets. Earnings might come down a little bit. I don't think that we're going to have stellar growth. I sort of am bearish about growth, and I think we're going to see high single-digit growth in coming years. But I think in terms of the stock market, this is kind of when you pick your spots and you buy stocks that you really like that are priced, far less than they were a few weeks ago. And look what happened, right? If you bought in June, you sort of missed out on what happened in July. So these things can, tend to continue until the market gets to a state where we start seeing that trend again.
Timing is everything. So as we look forward and we worry potentially because of the historical data that we know about September, but perhaps are more hopeful for October, what are some stocks on your shopping list?
So I like the old tech generals. I like Apple. We have that the big show, as we can call it, tomorrow. That's always exciting. I think that the company is a cash cow, strong balance sheet. They continue to innovate and touch all sorts of consumer spending, whether it's through services or goods. I like Amazon, Microsoft, sort of for the same reason, and Google. I think that these are just strong quality types of companies that tend to do well in these types of markets. And believe it or not, I actually really like semiconductors. They've just been absolutely slammed. And these are names that I dollar cost average in over time because I just don't believe that NVIDIA and AMD are going away anytime soon. You just spoke about this, but there's another bill coming out, $50 billion going to developing manufacturing plants, 10 or 11 to R&D, another 10 to technology.
Right.
You need this to innovate, to digitalize the economy, to sort of solve the jobs problem that we've had and to move us forward. So I am a fan of semis.